In July 2023, your bank sent you a letter. You probably tossed it out with the junk mail and grocery coupons. That letter announced the biggest shift in American banking in half a century. Everything about how your money moves through the system changed overnight, but they made it sound like just another update. Think about that pile of mail you always get from your bank. Account statements, privacy notices, new fee schedules. We've all learned to ignore those because they rarely mean anything major. But this time, things were different. Like your bank was actually telling you that your account was leaving traditional banking networks and switching over to Federal Reserve rails. Let me paint the picture for you. On July 20th, 2023, the Federal Reserve rolled out something called the FedNow service. Basically, this wasn't just another payment app or mobile feature. FedNow replaced the old automated clearinghouse system that had handled interbank payments for over 50 years. 4 days later, on July 24th, Webster Bank customers got letters announcing exciting updates to their accounts. Here's where it gets tricky. That Webster Bank letter mostly talked about what wouldn't change. Your account number stays the same. Your direct deposit still works. Your debit card still functions. You keep access to 40,000 automatic teller machines through something called the MoneyPass network. It sounded fine, nothing to worry about. But tucked into the tiny print at the bottom of that cheerful disclosure was the real news. Your payments would no longer move through private banking networks. Like from now on, every transaction you make runs through Federal Reserve master accounts. The government can now see every dollar you spend, every payment you receive, every transfer you make in real time. This pattern isn't new in our history. Basically, in August 1971, President Nixon said the dollar would temporarily stop being convertible to gold. He promised nothing would change for regular people. Your paycheck would still come. Your savings would still be safe. Your grocery store would still take your cash. But everything had changed. The country moved from money backed by gold to currency fully controlled by government policy. Now the same script is playing again 50 years later. Another major financial shift disguised as a friendly service improvement. The difference this time is that banks didn't ask for your permission. They just told you after the fact that your money now moves through government systems instead of private ones. Pop quiz. When was the last time you actually read one of those disclosure letters? Like, most people never do, and the banks know it. That's exactly why they use this method to move our accounts onto Federal Reserve infrastructure quietly, without discussion or debate. Here's what should grab your attention about the timing. FedNow wasn't built overnight in response to some emergency. The Fed first announced it back in 2019. They spent 4 years building it, testing it, and getting banks ready. This was always the plan. The only question was how to shift everyone's accounts without drawing public attention. Webster Bank customers who actually read that July letter noticed something interesting. The bank spent paragraphs describing cool new features like instant transfers and 24/7 access. Like, those sound great until you remember Venmo, Cash App, and Zelle already offered instant transfers. The speed wasn't the real change. Basically, the architecture was. Your bank account shifted from a private network to a direct link with Federal Reserve infrastructure. When you pay your electric bill or move money to savings, that transaction doesn't settle between banks anymore. It now settles directly through the Fed's master accounts. Think about what that means for your privacy. Before July 2023, the government needed subpoenas or court orders to look at your banking info. Your bank could step in and protect your data. Now the Fed processes your payments directly. They don't have to ask anyone for permission because they already handled the transactions themselves. But here's the part that really matters. Like, that letter you ignored didn't just move your account, it also pre-approved the next phase. When the Fed eventually launches its digital currency, your FedNow account automatically becomes a CBDC account. By the time you notice, the migration will already be done. Basically, your consent was assumed, not requested. The transformation giving government total oversight of American money happened through a notice most people never read. The groundwork is in place. The path is clear. And most Americans don't realize their accounts already operate through Federal Reserve systems. Your bank didn't just update your account in July 2023. They moved it into a government-run payment system. The next phase is already lined up. Let's break down exactly what happened when your money moved to FedNow. Before this change, when you paid your mortgage or sent money to your kid at college, the transaction went through the automated clearinghouse, known as HE. Like, H process payments in batches during business hours. Your payment might sit overnight or through the weekend before clearing. That seemed slow, but it actually provided some protection. Under the old setup, payments moved between banks on private networks. Basically, if you sent money from Chase to Bank of America, those banks settled it between themselves using their own reserves. The Fed oversaw the process but didn't handle each transaction. Banks had independence in how they moved customer money. FedNow changed all of that. Transactions now run 24/7 through Federal Reserve infrastructure. Every payment you make settles instantly and can't be reversed. When you buy groceries, pay rent, or move money to savings, the Fed processes it right then. That's where the privacy issue comes in. Before FedNow, the government needed warrants or subpoenas to see your activity. Now they already see every payment because they're the ones processing it. The Fed doesn't need to ask for access, they already have it. Like, the real surprise is what FedNow was designed for. It wasn't about making things faster. Venmo and Square Cash had that covered. This was about preparing the system for central bank digital currency. Every FedNow feature fits that CBDC blueprint: instant settlement, government control, irreversible transactions, and total visibility. Basically, that's the whole point. The Fed announced FedNow in 2019, but it took 4 years to launch. That delay wasn't technical, it was strategic. They needed time to make sure the shift to digital currency would be smooth once FedNow was ready. Your account migration in July 2023 was actually the first phase of the CBDC rollout. That's how they planned to get everyone on board quietly. When FedNow launched on July 20th, 2023, only 35 early adopter banks joined. But the system was built for fast adoption through correspondent banking relationships. Like, when big banks joined, all the smaller ones connected to them had to follow. Webster Bank is a great example of how that played out. They used a company called Fiserv for payment processing. Basically, Fiserv was one of FedNow's early partners, and through its MoneyPass network, more than 2,000 institutions got linked to FedNow. What looked like individual bank decisions was actually a coordinated infrastructure shift. That's why the Webster Bank letter highlighted the MoneyPass benefits. Access to 40,000 automatic teller machines sounds great, right? But in reality, MoneyPass was the bridge connecting local banks to Federal Reserve systems. Your bank made it sound like a perk while hiding the fact your money was moving on to government payment rails. It was a clever distraction. FedNow's irrevocable payment feature is another example of that control. When you send money through FedNow, the transaction can't be undone. That's totally different from each payments, which can be reversed, or credit card transactions, which allow chargebacks. Why would the Fed design a system like that? Because permanent, irreversible transactions give government absolute control. Basically, they can freeze accounts, redirect funds, or stop transfers instantly. Under emergency powers, that capability becomes full financial control. FedNow also lets the Federal Reserve deposit money directly into your account. No need for your bank to act as a middleman anymore. This is what really changes the citizen-government relationship. For centuries, banks have been intermediaries that protect customers. They could push back against unreasonable government demands. FedNow removes that layer completely. Now your account functions as a node inside a Federal Reserve network. That means your spending, saving, and transfers can be tracked, or even restricted in real time. The system itself allows it, even if your individual account doesn't show it yet. Most people who got those July 2023 letters had no clue what they agreed to. Basically, the fine print contained language authorizing enhanced Federal Reserve services, which is legal code for CBDC preparation. When digital currency launches, likely between 2026 and 2027, your FedNow account will convert automatically. Banks will send another cheerful letter about new digital wallet features. But the switch already happened back in 2023. Your bank account wasn't upgraded, it was restructured. This change was planned in 2019, executed in 2023, and finished before anyone realized it. The CBDC pathway is now fully operational. By agreeing to terms you never read, you pre-approve the next step. That step will remove financial privacy and make money programmable by government code. Now that you know how FedNow changed the system, let's talk about why. The Fed didn't build FedNow to make your life easier. Basically, it was built to prepare for total control through digital currency. They weren't competing with Venmo or Cash App. They were setting up a direct link between you and them. Here's the timeline. In 2023, the infrastructure launched and account migration began. Through 2024 and 2025, adoption will keep spreading across the system. By 2026, they'll start pilot programs for CBDC with federal workers and contractors. Then, by 2027, commercial rollout begins, advertised as the next evolution of digital payments. By 2028, most major transactions will require CBDC use. cash and private digital options will slowly disappear. That's when programmable money control becomes reality. Like CBDC isn't just digital cash, it's money that follows government rules automatically. The Fed can set expiration dates or spending limits directly in your wallet. Money that expires if not used, purchases limited by category, savings redirected during emergencies. Basically, it's total control written into the code itself. Think about how that changes your everyday freedom. Right now, you can drive anywhere, donate to whoever you want, or buy what you like. You can use cash for privacy or keep funds in private accounts. Under CBDC, every transaction is tracked and categorized, and each one can be restricted in real time. You won't be able to override those limits. The Fed already tested these features during COVID-19 assistance programs. Stimulus funds that expired, rent aid locked to specific uses, those were trial runs. Like CBDC makes those restrictions permanent. They'll be built into the money itself, not temporary policy. Banks didn't fight this shift because they couldn't. Basically, the Fed required modernization as a condition to keep operating. Any bank refusing FedNow access would lose Fed services entirely. That's not voluntary participation, that's regulatory pressure. FedNow was the testing ground for the real-time system CBDC needs. Every function that makes it efficient also enables government currency control. Instant settlement, 24/7 processing, centralized oversight, it's all part of the same design. The part that should concern everyone most is that the exit doors are closing. Before this, you could switch banks, use cash, or try alternative payment apps, like you still had options for privacy. After CBDC, those options vanish completely. You won't move money without approval because the control is baked into the currency code itself. Basically, the phase out of cash will speed up once digital currency takes hold. Cash will be labeled unsafe, outdated, or inconvenient. Stores will be told not to accept it. Banks will start adding fees for cash deposits or withdrawals. Soon, paper money becomes practically useless, even if still legal. Perception will make it irrelevant. The strategy depends on public ignorance. 95% of customers never read those disclosure letters. Like, of the few who did, most didn't understand what it meant. The automatic teller machine access, pitch distracted from the real change underneath. By the time people notice, it'll be too late. Basically, alternative systems will be gone. Cash will be restricted, and private accounts will be merged into direct government infrastructure. The control setup is already clear. In 2019, they announced the plan. In 2023, they launched it. By 2026, pilots begin. By 2028, traditional money fades away. By 2030, full digital control takes over the economy. Every transaction will depend on government authorization. Under that system, people won't have any real financial independence. Every dollar you earn or spend will follow government rules. You won't be able to buy certain things, travel where you want, or donate to causes they disapprove of. Your money will obey their programming, not your personal choices. That's the real meaning of programmable currency. The scariest part is how easily it's being done without public debate or consent. No one voted for FedNow, like Congress never approved a central bank digital currency. The Federal Reserve just built the system, moved accounts quietly, and got everything ready. Your bank account didn't just change behind the scenes, it became part of a government-controlled network. Basically, the infrastructure's already in place, and all that's left is the switch to CBDC. When that switch happens, it'll be framed as progress. They'll say it's for safety, convenience, and innovation. But by then, no other options will exist. Cash will be rare, private digital transfers will be restricted, and CBDC will be mandatory. The key difference is that this time you didn't choose it. It was chosen for you in July 2023 when that unnoticed letter arrived. The transformation wasn't random, it was deliberate. Like, the entire financial system was redesigned to fit this goal, and most people still think it was just an upgrade to make payments faster. FedNow didn't improve banking, it restructured it. Basically, what we used to know as private banking now functions through public infrastructure. The system already works like a digital grid for money. Americans move from private rails to Federal Reserve control without even realizing it. That shift means every future improvement will build directly on top of government-controlled architecture. So when they introduce digital IDs or programmable wallets, it won't feel new, it'll just appear like another small update. That's how these transformations always happen. Slowly, quietly, one letter at a time. By 2030, full digital currency control will likely be the norm. Like, paper money will barely circulate, and every transaction will leave a permanent trail. That's not some distant prediction, it's the trajectory already in motion. The most unsettling part is the silence. Basically, Americans weren't told what this meant. The language in those letters hid the truth behind cheerful marketing. Words like enhanced services and increased efficiency replaced plain explanations. They used friendly phrasing to avoid raising questions, but the meaning behind those terms was monumental. You now live in a system where financial privacy is a relic. Where the institution processing your payments is also the one writing the rules. That kind of setup doesn't reverse easily. If you want to understand how we got here, think about the gradual erosion of independence in the banking sector. Like decades ago, banks competed on service and trust. Now they comply with central regulations or get cut off. The Fed doesn't need to nationalize the banks to control them, it just needs to control the rails. Basically, by owning the infrastructure, they own the flow of money itself. FedNow gave them that ownership. Every transaction, big or small, now passes through their system. That's full oversight in real time. It's worth noting how subtle the rollout was. The initial letters never said, your transactions will now be processed by the Federal Reserve. Instead, they focused on perks like instant payments. That wording was no accident. The goal was to create a sense of convenience while hiding the architecture shift. People trust improvements, but question control. The communication strategy kept everyone calm. Basically, it let the largest infrastructure change in modern banking happen without public pushback. The old system was decentralized among banks. The new one is centralized at the top. That's the core difference. Before, each bank had its own network. Now, the network is the bank, and that bank belongs to the Federal Reserve. Once CBDC launches, control extends from infrastructure to behavior. That's when programmable features turn from optional to mandatory. The system could reward approved spending or penalize undesirable activity. Imagine your account balance adjusting automatically if you buy too much gas or fly too often. Those features aren't science fiction. They're built into the design of programmable currency. Basically, they just need to be activated once public dependence is complete. And dependence is almost here. By the time most Americans notice, cash will no longer matter, and alternative payment options will be gone. That's how quiet transitions become permanent. By the time dependence is complete, switching back won't be possible. People will be locked into a network they never agreed to join. That's the quiet part of this whole story. FedNow was the infrastructure stage, not the destination. It built the digital highway that CBDC will drive on. Everything since then has just been rollout. Next will come the integration phase, where all government payments, tax refunds, benefits, payroll must use the Fed system. Once that happens, opting out won't be an option. Your bank will tell you it's just for convenience, but the implications run deep. Basically, every citizen will have a direct account connection with the Federal Reserve. That link changes the meaning of money itself. It's no longer something you own outright, but something managed on your behalf. Ownership becomes permission-based. And permissions can always change. That's the power of programmable systems. They adapt instantly to new rules. The framework for that control already exists. Every feature of FedNow doubles as a control mechanism. Instant settlement means instant freezing. Irrevocable payments mean irreversible blocks. Those functions don't sound scary until they're used politically. Basically, that's when efficiency turns into enforcement. History shows this pattern again and again. Tools built for convenience often evolve into tools for control. The speed of digital change just hides the shift. In less than a decade, we've gone from independent bank accounts to government-linked ledgers. It happened while everyone was busy with everyday life. The next letters you'll receive will probably sound just as harmless. We're excited to introduce new security features for your digital wallet. It'll feel familiar, even comforting. But buried in that cheerful copy will be the next stage of the plan. Basically, that's how systemic change works quietly in the fine print. The infrastructure for total monetary oversight is already live. All it needs now is public acceptance. Once people rely on it fully, control becomes invisible. At that point, refusing digital currency will feel like refusing electricity. Technically possible, but practically impossible. That's the end game. Make participation mandatory by making alternatives obsolete. It's not forced by law, it's forced by design. And it all started with a letter most people threw away. Basically, that's the power of subtlety in modern governance. The transformation from private to public banking rails is complete. The next step just gives it a new name. When CBDC arrives, the transition will already be over. You'll hear talk about innovation, fairness, and inclusion. The same words used to justify every major shift before. But none of that changes the structure underneath. FedNow wasn't about helping you, it was about preparing control. Like the rails are laid, the code is ready, and the compliance language is already written. Most people won't realize what changed until the moment they can't move their money freely. Basically, by then, the control will feel normal. Once control feels normal, resistance fades. That's the psychological part of this design. Normalize it first, regulate it later. By the time people question it, it'll be routine. This is how the modern financial system reshapes freedom. Not through loud declarations, but through quiet paperwork. The shift already happened in your account terms. By 2026, the pilot programs will likely expand to more banks. Like by 2027 or 2028, traditional cash transactions will be so limited they'll seem old-fashioned. Businesses will move entirely to digital payments because that's what regulation will favor. Basically, it won't be a ban, it'll just be the easiest path forward. And when that happens, every purchase, loan, and paycheck will pass through the same network. That's the moment when financial independence truly ends. Because even if you own the money in your account, the system decides how you use it. And no one voted for that outcome. The letter you didn't read in July 2023 set it in motion. Like it framed a massive transformation as a simple upgrade. FedNow wasn't a new feature, it was a new foundation. Basically, it built the digital infrastructure for programmable money and centralized oversight. From there, CBDC is just the next software update. Once that launches, the old definitions of cash, privacy, and ownership will be gone. The system will operate seamlessly 24/7 under full visibility. There'll be no pause button, no middleman, no second layer of protection. Your transactions will flow directly through government code. That's the technical truth behind all the enhancements. And even if you wanted to opt out, there won't be a place to go. Basically, all private alternatives will rely on the same underlying rails. Americans didn't agree to this change, they just didn't see it coming. The transformation happened in the background while people focused on convenience. By now, the network is operational, the permissions are in place, and the language of control has been normalized. That's the quiet efficiency of modern policy. The financial system of independence is gone, replaced by infrastructure that monitors itself. The future of money won't just be digital, it'll be conditional. FedNow wasn't a service upgrade. Basically, it was the silent rewrite of how money works in America. And that rewrite is permanent. The system's built, the switch is flipped, and the control is live. Your money no longer travels through private rails. It moves through a government network that sees, records, and approves every step. That's where we are now, the transformation complete, the oversight total, and the illusion of choice intact. All it took was one letter most people never bothered to open.